What's going on, everybody? This is Chris German. I'm super excited to be here. Today is, well, now it's after midnight, so today is August 14th, 2021. Alright guys, super excited again to be here, to be able to share this awesome information with you guys, and hopefully it helps you on your trading journey. Alright guys, so let's get into it. This video is going to be a simple market structure slash Ichimoku Cloud and Fibonacci retracement in order to find, with the Bollinger Band and RSI, to be able to find the most sniperist entries that we're looking for to either A, be a profitable scalp trader, or B, a profitable NFX or binary trader, right? So when I do my basic analysis, I break it down. I go from top down. I start from the daily, and then I work my way down to find a resistance, and I found a support resistance, and then I find my support. Alrighty. Now, if you're finding it difficult to determine should this be your support turned resistance area, or if this should be your resistance area, or even if this should be your support area, just go over here to the bars, scroll down where it says line, click on line, and you're going to be able to see if price has stayed in this area, or I've respected it like it has here, over in the same area, and this area too. We could push up just a little bit, maybe even go right there, right? Remember guys, it's not going to be perfect. It's our job to get as close to perfection as possible, but nothing is ever perfect, especially when it comes to trading in the financial exchange markets. So, moving on, now that we have our line and our candles all drawn up and we have our time frames marked up, so this is a daily support, daily resistance, turn support, daily resistance. How do I know all this? Because if I'm on the 5-minute, how would I know all this? Because I have my lines at size 4, and I know that the red means resistance to me, purple means resistance flip, and then blue is going to mean support. Now, no worries. If a different color combination works well for you and you're familiar with it, use it. This is just what works best for me with the size of the color and lines. Whatever works best for you, just make sure you have a plan and you're utilizing it. Alright, after we got the daily done, let's go ahead and zoom in on the hour time frame. Actually, me personally, I even like to go on the 30 minutes and see what's going on. But let's just stick to the hour for this demonstration on this video. So, now we have noticed that our daily resistance that was flipped to a support is going to act as our hourly support. Very good. What I want you to understand is that there's levels within inside levels. There's support and resistance within inside support and resistance. There's trends within trends. There's moves within moves, right? So just because you're on a daily uptrend doesn't mean you're not going to see selling pressure or selling opportunities on a shorter time frame, on the 15-minute, on the 5-minute, on the 1-minute, because those opportunities will present themselves. However, it is always recommended to trade with the trend, because the trend is your friend until you get that dang bend in the end, and that bend is telling you, hey, trend is possibly changing, and let's wait or stop taking entries at the current market conditions that we have sought for ourselves. So, now that we got the daily and the hour time frame, I'm going to go here since hour. I'm going to make this a support area turned resistance. Can you see that, guys? It's acted as support here, broke through this area, acted as support, all support throughout this area, broke this area, retested it. I'll zoom in. After it broke this area here, came back up, retested, dropped down to the next support, came back up here, got rejected, and same thing over here, guys. Came back up and got rejected again. Alrighty, this is a good area that has been flipped in the past, so maybe it could be flipped in the future. Let's see. Again, price came up, worked up the area, got rejected, pushed back down, and as you see, we haven't really pushed back up through that area. So, we have this area marked as our resistance area. We have this area marked up as our support area, and this area marked up as our next major resistance area. Now, because we're trading on the smaller time frames, let's get into it. Let's zoom in and see what we got. Also, I like to determine real quick, let me go back to the daily. I like to determine the overall direction of the market, okay? Yes, we can see that the market has been in a primary uptrend, right? But as we can see here, let me change the color of the arrow. Make it something y'all can see. A nice like teal. Alright. Make it forward. Boom, boom, boom. So, as you can see, trend support, trend support, trend support, trend support. Yeah? Alright. Now that we know that, let me just go here. Let's tighten it up a little bit. I just want to touch that wick. And I can even go down on this side a little bit lower, just so we have this in here a little bit better. Alright. Remember guys, trends, it's just like a support or resistance. It's never going to be perfect, but as long as you have the idea, right? So this kind of like stayed around. It didn't really break it. However, you can see here, we have a nice clean, solid break of this area, of this trend. Not only is it breaking the trend, can you tell me what else it's breaking? It's breaking back in to the shorter time frame. Let me make sure I change that. It's breaking back in to the shorter time frame. Was support. It's about to be turned back. Once it breaks back, it's going to be act as a resistance again. Because once a support, I'll show you real quick. Once a support is broke, I'll just show this demonstration real quick. Yeah? Does that make sense, guys? So once a support resistance is broken, it flips it to a support or resistance of the opposite side. So what does that mean? I'm going to show you. This will change to pink, and this will change to the teal color. Make the lines a little bigger so we can show for this demonstration. Alrighty. We have our resistance, we have our support. Now when price this is a zone, right? This is staying in between support and staying in staying above support, staying below resistance, okay? Sometimes you'll have a support turned resistance in the middle, like we have here and here. So price come up, push back down. try that again. I didn't mean to make that curve at the end. So price, finds support, pushed up to resistance, pushed back up to resistance, comes back. This is a consolidation type of phase. Now when you're looking for a sell opportunity or a buy opportunity, it needs to make sense, right? So if we have price staying here in this whole area down here by support, would we be looking to sell it or looking for buys? Support, buying area. While resistance is a selling area. Yeah? So we're selling the resistance and usually buying the support when it comes to market structure. You have to be very careful doing it, because a lot of times what will happen is something like this. And it'll carry down, right? We got that fake break to the downside here. Price pushed up, found support at the same area, pushed up again, and then came all the way back to the resistance and finally broke it here. Now, while it's breaking here, we're looking for buying opportunities, right? Say we didn't get it, buying opportunities based off our indicators analysis, so we're not buying right now. We're waiting to see where if price can form a nice support over this area, and waiting for additional confirmations before we enter the trade. What additional confirmations can we use to justify or validate this area being a support area, this area being a support area, buying area, right? Simple, okay? We can use a couple of our indicators that we're familiar with, okay? Show this on a larger scale so we can see it. Now, just using my demonstration here, do we have areas of potential interest? Well, yes, we do. Right? Let's say that, we can move this over here a little bit so it's more lined up. Okay. So we can see that as we're overbought here, we're also pushing up to the resistance area. So if we're overbought and we're coming up to the resistance area, what can we look for? Exactly, guys. We can start looking for sells. So that's just, a little bit of market geometry, understanding how the markets work, and not getting trapped in a breakout trade, okay? Because a lot of times we'll see the break that we're looking for, but it won't go our way, and we can't figure out why. The reason being is because the market works off of zones. It doesn't work off of support or resistance. Although a support can be a zone, or resistance can be in a zone, you have to understand how to use it for your advantage in the markets, right? So, example, this area is the support area here, but we had price sneak away and drop a little bit below it, pushed right back up. Awesome. But we weren't buying here because of the break. We were waiting for the confirmation, which came when price touched our RSI and told us, hey guys, we're extremely oversold here. We could possibly be looking for a move to the upside. Ah, okay. So that's when we start buying, right? Now, Let me delete this. Let me delete all those drawings here. Okay. Actually, before we go, so we have a beautiful uptrending market that is now in phase 2, or possibly changing direction. As you see here, we are in a secondary downtrend, right? Now, we have this break here. We can see the break of the trend. However, it comes down to this support area that in the past has acted as a resistance area. So now when it came back to it, it's going to be support. As you can see throughout all here, we have supported on this area, or at or above this area. Now, all trends, everything has a break and a retest, right? We are not a break trader, we're retest traders. We want to see the pullback up to the trend. We want to see the pullback up to the trend and then get rejected, right? So that was pretty cool. That's a beautiful break, retest of a trend, rejection, downside, came back, retested that same area again, and rejected again. And here we are finding ourselves back in that same area with being rejected. So I'm going to add my alert here, because in the future, next week, coming up when the market's live, I'd like to see that area be broken. Because if that area is broken, what we can anticipate is something like this, like a continuation move to the upside. Where price will break out, come back, retest the breakout area, might even back test the breakout of the trend, right? And then make that push higher. So if we break this zone here and start pushing up, we're either going to catch the retest here on the daily support, or smaller time frame support, or we're going to catch it here off the daily trend support and daily structural support. Okay, so there's a couple ways to play this. We wait for the pullback to this area and enter a buy if our indicators and additional confirmation are telling us to, or the same here with this, right? So now that we have the market structure, so anyway, the reason why I would buy this here is, look at this move, guys. This is a beautiful, even if we entered here, that's 375 pips, guys. That's a massive, nice move, right? But say you say, okay, we see that this area has acted as a resistance area in the past too. So take it up to here. Nothing wrong with taking 170 pips. Take majority of your profits here and let it go for partially more profits, right? Doesn't hurt, guys. As long as you understand your plan, as long as you're risking the proper amount per your account size, and you're consistent and stay persistent and follow your plan, you'll get ahead, right? So now that we have this marked up, now that we have this understanding of what's going on here, or what potentially could be going on here, let's go to the smaller time frames, see what we are looking for and what we could use, and let's backplay it out a little bit. Okay? Let me just clear this down. So now that we got the daily in, now we're going to go, we already did the hour, we're going to go 15-minute real quick, just a quick review, see if we have anything that I can see clearly. Okay, so on the 15-minute, I see this area here has acted as a significant support in the past. So I'm going to mark it down just so I know personally that price has reacted from that area before. Same thing with here. Price has reacted from this area before. Price has reacted from this area before. But because we have this rejection here, I'll keep it like that. And make that, oops. Support, resistance, okay? Now that we know that, now we can see if we have a trending market. We do have that downtrending market that we're talking about here. So you see the difference. Daily trend, smaller time frame trend. Daily resistance, turn support or flip back to resistance. Same thing here. However, the size of the line is going to tell me whether I should respect it as a major possibility because it's a daily or weekly resistance support or support turn resistance, or if it's just on the shorter time frame. Now that we got that done, I can see here that we're in a 15-minute downtrend. Consolidation trend, I should say, because if you see, we're kind of still playing an upward momentum move, right? But we're at the top of this particular channel here, so price could come back down. We're at the resistance level, and we know that if price gets rejected from resistance level, the odds are of it coming back down to a support are significant. So if it comes back down to this support, boom, you made your 20 pips for the session. It comes down to this support and trend support, you made 45 pips this session. But what are you risking? Well, this one could be a 101. You could be risking 101 because you're not going to want to see price come up and create a new high here. You're going to want to see price come down and create a lower low or bounce off the trend, but at least take the trend here or the partial profits here at 20 pips and then the bigger bag down here. How can we use Fibonacci's on the smaller time frame for NFX, binary trading, and scalping? So now that we have our trends marked up, we have all of our analysis beautifully drawn out. We got our support, we got our resistance, we got our support turn resistance, we have it on multiple time frames, and we have an understanding of where the market is trending and what we're looking for, right? So before that, we move on. Right now we're in a downtrend, right? So when you're in a downtrend, use the Fibonacci extension low. You're going to go from the highest resistance area down to where price came back and the next high. So we could go up to here. You go here or here, but I'm going to go here because price, as you see, we have multiple components. So it's a recent high down to the moves low to the next high. Okay, boom, boom. And then for sells, it'd be the opposite. So for sells, you would do something like this: down, or yeah, up, down, up. Instead of down, up, down, it'd be up. It'd be the opposite. Okay. So instead of it being down, up, or yeah, down, up, down, it would be up, down, up. All right. Okay. So now that we have our Fibonacci drawing out, we can see if we're in a channel or if we have a zone. Which, yeah, we do have a channel. We're in a trending channel here. So let's bring up our Fibonacci trend channel here. And all you're going to do is click on it once and head in the direction of the trend of the market movement. And we can see that it's right here, right? Like really where the good price action is. And then you take it down to the most recent low. You take it down to the most recent low. Boom, there we are. Now it's our job to find potential trade ideas. Now one thing I need you guys to understand is the more confluences, the better, okay? And sometimes, guys, I need you also to understand that taking the best trade is possibly not taking the trade at all. So if it's not that trade you want, let it go. It's okay, okay? But let's pay attention to some certain areas. 618, 236, and the 382. And then vice versa. On the flip side, it would be 1.168 or 1.618. 1.382 and 1.236. Okay. Yes, there are other areas of Fibonacci that could work or have a reaction from, like the 786. However, for this demonstration, we're going to keep it simple. Stick to the 382 or the 236, the 382, and the 618, and then the flip. Just add a 1 in front of it. Okay. So knowing that we have it marked up, we have our support resistance, all of our market structure, all of our analysis ready to go, now we're good to finally start looking for those potential trade ideas. But we want to do this as if we were watching it live, as we're watching it while the markets are happening, right? In real time. So what we're going to do is we're going to go to the replay, and we're going to start from, well, first off, let me go to the 1 minute time frame because that's where we'll be picking our trades from. I mark up my charts. I mark up my charts top-down analysis, so that, like I just showed you guys, I start at the daily, work all the way down to the hour, and then I go in on the smaller time frames to see what we got going on now, right? And for my Fibonacci levels, while I'm trading or scalping or trading NFX, I am actually doing my markups off the 5 minute, and I'm checking the 3 and 1 minute for possible entry areas, okay? Now let's go to the 1 minute. We're at the 1 minute. Now we have all of our Fibonacci's levels, areas reacted. Let me just see something. Okay, so we're going to jump back a ways. I haven't done that yet, so we'll jump back to here. Yeah? Awesome. Okay. So we are in, and we're going to turn on our cloud, our Ichimoku Cloud. So we have our Ichimoku Cloud, we have the RSI, we have our market structure, and then we have the Fibonacci sequence, Fibonacci trend and trend extension, and the Fibonacci Fib channel. There we go. I couldn't get out the channel. Okay. I already said we're looking at the 236, the 382, and the 618 respectively. Now, for those that aren't familiar with how the cloud works, the cloud is, we're just using it as a sentiment. You know, it's letting us know what could potentially be going on for potentially how long. So it's in this area, when we have a green cloud, we're going to be looking for buys. We have a green cloud out in front of us, we're going to be looking for buys. When we have a red cloud out in front of us here, we're looking for potential sells, okay? Then we have this twist here, which could possibly be the beginning of a upward move, or could carry to the downside. Let's see, because remember, we're in a selling market. We're looking for possible trade ideas. Now, I want to show you guys something I see off the top of my, with just my naked eyes real quick. As you see this here, go yellow and go size 4. Here RSI has created a high, and RSI created a lower high. But in reality, what happened? The RSI actually did create the high over here and created a higher high in price action over here, but failed to do that with the RSI. This was a very, very good indication that, hey guys, now that we see the market is turning bearish out in front of us, we say, hey guys, we're looking for sells. We're looking for sells. We have a divergence. We're at an area of resistance. Boom. We have a doji at that same area, followed by an engulfing candle. Followed by this candle engulfs the previous candle. That's a very good confluence in price being oversold. Price being overbought. Price being overbought. Price being at a possible rejection area near a Fibonacci level. We can anticipate with the cloud in front of us, out in front of us, that we could be looking for sells. So maybe you don't get in off this doji. Maybe you don't even get in off. You wait to get in until you see the bearish engulfing candle. That's fine. Wait for that additional confluence if you need to. But you enter as soon as the trade exits here, right? You go to line size 2. keep it yellow. And yellow here. Okay. Right here, guys. I have our bearish engulfing candle. This is our entry is at the close of this candle. Now you can enter a 3 to 5 minute trade. Okay, so we enter at the completion of this candle. This is minute 1. This is minute 2. We got that push down that we were looking for. Big push down, minute 2. The 3rd minute, we clear it. This would be the 4th minute, and then over here would be the 5th minute. So you can see our entry is here, and price closes here on the 5th minute. And coincidentally, it closed just a little bit higher on the 3rd minute. So the 3rd minute closed here, 5th minute closed here. Winning trade, winning trade. Now the confluences that you would have taken, right? We had the Ichimoku Cloud out in front of us going bearish. We had a divergence here. We were at the overbought area, and it looked decent, right? Maybe currency strength was in your favor for sells. Maybe the dollar was stronger than the NZD, so that you had that as additional confluence as well, okay? We don't really know what currency strength was like, but let's go forward and see where we could possibly look for some more sells. This would have been a decent one. Okay. Now let's find the 618 is going to be the white one. Let me just go back. The 236 is going to be the red one. Just want to find out the 382. 382 is going to be this green one. Okay. Got it. The light green. Okay. So, remember what I said. With Fibonacci's, guys, Fibonacci can act as support and resistance, just as a trend support or a trend resistance or a structural support or resistance. There are areas of potential interest where price can react and act from, right? So look at this. The white line I said, remember guys, is the 618. Look how beautifully the 618 is respected. Look how beautifully the 618 is respected. Guys, these are all buying opportunities. When price comes down to the 618, these are good potential buying opportunities. Good potential buying opportunities if you have the additional confluences, if you have the additional confirmations. So here, we are oversold, extremely oversold, at a support area, at the 618. Yeah, we can. And we start to see that we're getting that cumulative, and the push to the upside could potentially be happening. Yeah, guys, we're taking the buy here. But over here, we might not be taking the buy. Why? Well, RSI's already started pushing up. It's already started making its move. So if we entered here on this candle, I'm going to touch this area on the 618. We're 1, 2, 3, 4, 5. We clear that trade no matter what, guys. And say you did come back in and you re-entered here. 1, 2, 3. 1, 2, 3, 4, 5. You clear that trade, guys. It's a winning trade. That's a winning trade, guys. Awesome, awesome, awesome sauce. But let's watch it while it's playing out, and let's look for sells because we're not looking for buys, right? Right. Let's get into it. Well, first off, I just want to acknowledge that yes, we are approaching the we are approaching the overbought area, and we could potentially be looking for sells. Now, what area could we potentially look for a rejection from? Well, based off of what I understand, we could be looking for the 236, the 382, and the 618. Well, since the 618 has already been in play down here for a buying opportunity, let's go back and see where the 382 is. Okay, I believe this will be the 382 or maybe the 5. Let me just make sure. Okay, that's the 382, right? Okay, so now that we know that this green area, here is going to be a potential rejection zone. So here, since I'm an NFX educator, my idea would be to be looking, since we're looking for that sell, we're coming up to that overbought area, and we need to find that area where, yep, price definitely want to push us up to this area and get rejected. So knowing what I know, knowing what you know, we could anticipate, and we're not going to be right 100% of the time, guys. So I'm doing this live with you. I don't know the outcome, what's going to happen, but I do know that I'm going to take these trades every single time I see a potential setup. The same way I'm going to take that trade idea, because I backtested and I understand what happens in the market when the market reaches these specific areas when you have multiple confluences to take the trade, right? About that. Okay, hear me out, guys. We know that we're pushing up into the overbought area. We know that we could possibly be coming up and touching this area. We know that this area has been, in the past, a rejection area. So we can anticipate price coming up there and getting a reaction. Will it happen perfectly? I'm not sure. Let's see. Will it happen all the time? No, guys. I'm not here to lie to you guys. I'm here to help you become better traders, right? And by me lying to you, I'd be doing you and I a disservice. Because when I'm not truthful with myself and my audience, then I can't grow. But when I am truthful with myself and audience, and I am going over what I'm doing, I can actually learn from it. I can actually get better. I can realize things as I'm going along, explaining and teaching how to actually get these better entries in the market, so we can all be a part of that 5% profitable traders in the market, in the financial exchange market, right? That's all we want, guys. We want to be consistently profitable, so we need the best possible trade entries in order to make this happen. So let's see what happens, guys. We're looking for a trade. We're looking for a 5-minute trade. Let me just mark this up. 5-minute trade. I'm gonna mark it up as if I was taking it with my team, or sharing the idea on NFX app. Anything, guys. Anything. If I shared the trade idea before price moved up in that area, this is what it would look like. 5-minute sell, since it's NFX trading, we put the put in there. 5-minute sell put at, and then we find the entry. Okay, it says spot 070 and 520, right? 5-minute sell put at 070,520. Okay, now that's this entry here. This area here. Let's play this. Also, I do want to acknowledge that we do have, as this is the Fibonacci trend extension 382, we have an additional confluence with the trend channel, Fibonacci trend channel here, as this is being the 236. So we have more than enough confluence in this area here with the 236 and the 382 being right here. We have enough confluence in this area to be looking for that possible sell. But because we're not looking for any area, we're looking for the best area, we're going to take it right from the 382 Fibonacci extension level. Okay? So let's continue this and play it out and see what happens. See if we're going to get that sniper entry that we're looking for. Let's go. Just want to bring it to your attention right now. As you can see, price is now at that 236 Fibonacci rejection level on the trend channel. Okay? Let's see what happens. We can get a reaction to the downside here, or we can wick this and then drop. And that's what I'm looking for. I'm looking for the wick of this and drop. Let's see. Oh, did you guys see that? I know you guys seen that. That was a massive price rejection as soon as it hit that 236 area. Whoa. So we got that 1 minute move, and then immediately after, we're pushing right up to this area, guys. You guys getting that feeling like, oh, the trade's about to come, it's about to activate, it's about to activate. Yeah, because I am right now. Let's see what happens. Let's see if we get that entry. Oh, guys, look what happened. Yikes. Let me put this in white and make it size 3 so you guys can see. Oops. Let me put that back. What happened, guys? Price hits the 382 rejection area. We've entered the trade. We're still in the same time frame. I mean, maybe 10 seconds has gone off the trade. But as soon as we entered, it doesn't go down right away. It pushed up. Can you believe that? Let's run it, guys. We got a 5-minute trade for a reason. Let's see if we win this trade. Okay. This is minute 1 candle. This is going to be the first candle. 1 minute. This is our second candle, guys. This is our second candle. So this is 2 minutes into the trade. Price is pushed up a little bit higher than we anticipated, and it's still making its move. Still pushing up. Let's see. Okay. Now it's making sense. Chris did say there was going to be a reaction at that 382. We've backtested numerous enough times, and now we're starting to get that reaction. Price just needed to push up a little bit higher before it got that rejection. So let's just make this clear. We entered on this candle here at this level. So it's going to be 1 minute, 2 minute, 3 minute. This is going to be our 4th minute candle. So we got about 30 seconds in the trade. We got about 30 seconds left in the trade. Currently, we're at or near break even or in slight profit. Let's play it and stop. Play and stop. Play and stop. I just want to stop on the next candle. Okay. I need you to see what just happened. I need you to understand what just happened. Okay? Because this is important for you to understand that this trade is a winning trade. We just won that trade. Okay? In this candle here, when it opened, the first few 30 seconds, first 20 seconds, we were already in this trade on this candle here. So say we only had 30 seconds active. 1 minute, 2 minute, 3 minute, 4 minute, 30 seconds active. We get 30 seconds of this candle here. Guys, that is a winning trade. That is a winning trade because price, as you can see, even if I push it all the way just under the white line right there, we have that whole wick, which means that's where price opened up at. It worked down to before coming back up, right? Let's see how the next candle plays out just in case. Wow. Isn't that incredible, guys? I can't make this stuff up. I had no idea, guys. You've seen it. We just cleared the chart, went back in time in history, and ran it. But we went off of our analysis. We went off of understanding what areas of a Fibonacci extension can be tested and have a reaction from, regardless if it's buys or sells. It would just be flipped. So instead of it being the 382, it would be the 1.382. Instead of it being the 618, it would be the 1.618. I hope that makes sense, guys. Hope you're finding value in this video, and I hope you're learning something, guys. I hope you're learning something. So as we come back to the 236, we may just get that buying entry that we possibly are looking for. However, the cloud is green over here. We need some type of confirmation. I'd like to see if we're still going into an uptrend. We would want the price to come back and bounce up. But for this example, scratch what I just said. Let's focus on selling opportunities because we are in a downtrend and we know that. Continue. Let me get rid of that buying opportunity because, like I said, we're looking for sells. So where's our next sell level? Great question. Well, we do have the 236 Fibonacci rejection zone at this area. We have another confluence at this area too, as it's going to be the top of our channel. It's going to be the top of our trend, right? This is our daily, or our, excuse me, this is our hourly trend. This is our 236 Fibonacci extension level. So we are under the assumption that price could work up to this area. Why? Multiple reasons, guys. Multiple reasons. One, we're not quite over bought anymore, are we? No, we're not. Second thing, we have a lot of confluence in this area, guys. We have the trend rejection area, and we have the 236 Fibonacci extension rejection area as well. We are also looking for sells in this market. Let's see if we get it. So at this point, when I see this structure as a possible bull flag. I know that when a bull flag breaks, it tends to travel the distance of the pennant, right? And look what happens, guys. It gets us to that area of interest. Coincidence? No, guys. There's no coincidence when it comes to trading. Understand that. Let's run it. We're looking for a sell when a price comes up into this area, regardless of when it is. I don't know when it's going to happen, but if price comes back into this area, we're looking for a potential sell anywhere in this area. See why you avoid taking buys in a selling market? Because that would have been a close trade, one that you don't want to be in, one that you might have lost. I also want you guys to understand something too. You see how price, once it rebroke in, it came back and retested that 318. If this cloud was red, you could have started looking for sells. You wouldn't have started looking for sells until you've seen the cloud. See how it starts to curve down? That could be your early indication that we're consolidating and we're possibly going to get that move to the downside. So again, we have the cloud starting to turn and curve down. But what are we waiting for here? Well, we could wait for the rejection of the 382 again. Happens here, enter 3-minute trade. 1 minute, 2 minute, 3 minutes, you would have cleared. Or you took a 5-minute trade. 1 minute, 2 minute, 3 minute, 4 minutes, and 5 minute, which is a doji. So you could have potentially entered a 5-minute trade there. However, knowing that we're possibly going into consolidation, we're going to want confirmation, right? We're going to want confirmation that we're not going into consolidation, that we could possibly get a move that we're looking for. Where does it come? This bearish engulfing candle here, guys. This bearish engulfing candle here. You could have potentially looked for a sell, a 3-minute, 5-minute sell after you got confirmation. We rejected the 382 again, and we have a bearish engulfing candle followed by a doji. That, my friends, is potentially telling you to sell the market here. Okay? 3-minute, 5-minute sell after the completion of the doji, followed by the bearish engulfing. Your entry is here. 3 minutes, 1 minute, 2 minute. Let's play it. 3 minute. That's our 4th minute. And there's our 5th minute candle. So 1, 2, 3, 4, 5. We cleared a 3-minute or a 5-minute, didn't matter. So that was another sell. Now let's see if we can't. We're still waiting and see if price can come up here in the future. If price comes up here in the future, there's a good chance we're going to get rejected. Let's speed up the play speed a little bit just to see if we can't get what we're looking for. Not sure if it comes to us or not. I forgot actually already. But let's see. It's also good to notice that this is also a Fibonacci level let's go back in time and see what this one is. This is the half, 0.5, right? Awesome, awesome. So you can see that we are getting respected and retested at areas of interest. Let's run it. Let's see if we can get this push to the upside here. Although we do have a divergence here, as you see, price created equal lows here and here. However, the RSI said price created a higher low here, so you could have took the divergence up, and as you see, price cleared, pushed up. Pretty incredible stuff, guys. But we're not looking for buys, we're looking for sells. Let's get it. Just waiting for price to come up in this area and get rejected. Or will price come back up to here and get rejected from here? Oh, whoa, 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 whoa. Look at that, guys. Price was out of this zone. Price was away from the 382. As soon as price comes back up to the 382, look at this. We get rejected, guys. We get rejected. Now, would you want to trade? You would want a 3-minute, 4-minute, 5-minute, you would have broke even, guys. 5-minute, you would have broke even. 3-minute, you win. It's okay. It's okay to break even. Break even is better than a loss. Now, let's continue to see if we're going to get our entry, guys. I'm not really sure if we're going to get it or not. Okay. My bad. Our entry is up here, actually. This was just the short-term resistance that we had on the 15-minute time frame. So price could stay below here, consolidate, then break this area, push up, and then get rejected. But let's run it. Let's see what happens. Wow, did you see that, guys? Price came back. After we broke this 382, price pushed up. The very first time it came back to it, look at this. It acted as a support, guys, as a support. We still didn't get the push down to the 50, so we probably wouldn't have bought it. However, we were looking for buys over the green cloud. For this example, again, overall time frame, we're in a downtrend, and we want to look for sells. So let's continue. Whoa, hey, oh, we're getting that move. We're getting that move. Let's see. Let me back this up real quick, guys. Let me back this up real quick to this candle here. We'll go for a 5-minute. Say 70600 even, so 0.70600 even. Now look. Whoa, there, whoa. That thing almost wicked it on the first one, but nope, got it on the second one. Wow, guys. Alright, I don't know if this is a good sign or not. Just kidding, but guys, it's no coincidences that price rejected. The wick rejected this area. Why were we looking for potential sells in this area? Well, we're in a seller's market. We're in a downtrend. This is the top of the downtrend. This is the 236 Fibonacci extension retracement level that we're anticipating a reaction away from. Regardless if it breaks it in the future, we're looking for that reaction the very first time it comes to it. Let me mark this down. With array, we enter, at 0600 for a 5-minute sell trade. Let's run it. Okay, so here we are. We're in 1 minute. Candle push up 1 minute. 1 minute here, 2 minute here. So we got about 2.5 minutes left in this trade for it to be a winning trade, guys. Get rid of this, push this over to the side. Let's zoom in and see what happens. We entered the trade here at 600 for 5 minutes. 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minutes. What I need you to understand here, guys, is that we took a 5-minute sell option here, and look, price never ever came back in that full 5 minutes. So when you're using the cloud, Fibonacci's, and your analysis of market structure, you guys won't have any issues finding the sniper entries. You will not have any issues pinpointing other potential selling opportunities in the market. I didn't even know there was a divergence, but I just saw it now. Even more confluence on why we should have took that trade. Understand, guys, not every trade is going to be perfect. Not every trade is going to work out and play that way. But I've just shown you a few examples on how you can use the Fibonacci extension level with the Ichimoku Cloud, your RSI, and other indicators that you feel will help you. Feel free to use them. But guys, remember, too many indicators is a bad thing, because when you have too many indications, you could possibly get half of a signal here, half of a signal there. So find out what indicators are best for your strategy. Follow your trade plan. Stick to proper risk management. And you, my friends, will be in the top 5% in no time. But with that being said, guys, I'm going to end this video. I appreciate each and every single one of you. I hope you found some value in this. Let me know in the comment section below. If you haven't yet, please hit that like button, hit that subscribe button, and I'll see you guys on the next one. Bye for now.